Hi, good afternoon and welcome. You're watching Halftime Report. It's 12 noon and we're going to take you everything that has happened so far in the trading session and what to prepare for the rest of the day. I'm Sumaira Abdi and with me is Lata Venkatesh. Hi, Lata. Good afternoon to you. And just about a few minutes back, actually, we saw a sudden takeoff in the market. So the Nifty has reconquered that 10,000 mark. And look at the way the banking stocks have taken off. So the Nifty Bank now up about 1%. And it's actually banking and financial. So if you pull up the contribution chart, you'll see HDFC there. You'll see an IndusInd Bank there. Even though its weightage is so small, it's now topping the charts today.
Oh, absolutely. I mean, 4% higher for IndusInd. So it appears that the market spin is that Bharat Fin didn't get so many suitors. So the tune will be called, as it were, by IndusInd. That seems to be the market's interpretation. And that's why we have seen this vertical rally coming in IndusInd. Bharat Financial also higher. Oh, that's also almost 4% higher. So basically, okay, one shouldn't be saying it's one-sided. IndusInd is just 1 percentage point higher in terms of gains at this point in time. But yes, it's a vertical rally for the market starting about 11:15 or so. So we'll have to wait and see if this is some curb rates from Europe that's bringing a spring in the step to the markets. 10,000 there, that is the most important thing. The market has reconquered 10,000 after a longish bit. We'll get more on what our technical experts make of it. Definitely the range is broken. So is this the time to buy? That's what our trading experts will tell us. But before that, let us apprise you of the top headlines. It's a good start to the trading week as the frontline indices edge over 0.5% each. Midcaps outperform marginally while banks give the strongest support.
IndusInd Bank hits a 52-week high as CNBC TV18's news break is confirmed. The bank enters into exclusivity talks with Bharat Financial. Ramesh Sopti speaks first to CNBC TV18, says the deal will be margin and EPS accretive from day one.
Tata Motors, Maruti and Mahindra & Mahindra gained today on lower than expected cess, a hike on mid-sized cars, large cars and sports utility vehicles by the GST Council. Jain Irrigation surges 4% after the Council decides to lower rates on irrigation equipment.
Gas stocks in focus after India renegotiates LNG pricing formula from Australia's Gorgon project to make fuel affordable to the domestic customer. The new price is 13.9% of the prevailing oil price at port of delivery.
Okay, that's some important flash coming in. It's IIFL's note on Cadilla says launch of Lyelda by Shire will put downward pressure on its prices. This is absolutely Latin to me. Yeah, but actually, we will have the person who knows Latin in our company. Yes.
Ekta had sent us a note earlier which said that this could possibly reduce the prospects from the drug, which is one of Cadilla's biggest launches. In fact, Ekta is here with us. Ekta, can you explain it?
Well, yes, actually this particular piece of news is also confirmed by websites in the US. If you look at these websites where they look for certain drugs online, you can find that, the authorized generic version is available, the generic version is available. Now, just to give it, put it into perspective, Shire is basically the innovative company. It's an Irish company that has the patent on this particular drug. But they also have the ability to launch an authorized generic. So they'll tell someone that you can basically, we'll manufacture the drug and you can sell the drug at cheaper prices. Now remember that Cadilla had launched this drug just a couple of months ago, and this was basically from the Moriah facility. It's over $1 billion in terms of market size, and it was the only generic company to sell this drug. Okay. So now what happens is
it has competition.
It has the authorized generic, which is basically from the innovative company itself, which has launched its version into the market. So that means that no, there's no other generic company, but it is an authorized generic who's in the market. So there are 3 players as opposed to 2 earlier. So that means that what they were expected from to generate from Lyelda is now probably going to come down. So if they were expected to say make 50 million per year, they'll probably make 40 million or 30 million.
What's Lyelda again?
Lyelda is basically used for ulcerative colitis. That's the that's not the generic version name of the drug. That is the patented name of the drug. Lialda is the patented name. Meslamine is basically the generic name of it. It's used for ulcerative colitis. This was one of the biggest launches for Cadila. So now it's seen its first competitor come in.
Okay, so any numbers on how much it might shave off in terms of?
It's too preliminary right now, but just give me a couple of minutes because I was just trying to see which website had it.
Okay.
But just give me a couple
fair
of
enough.
minutes.
I think all
drug.
analysts should be doing their calculations,
Yeah.
and we will call you up again on the show if you can give us a number as to how much it might impact earnings or profit. Well, with that, we go to other stocks that are moving and shaking. Our movers and shakers segment starts with IndusInd. As IndusInd enters into exclusivity talks with Bharat Financial, Romesh Pukti spoke first to CNBC TV18. Let's hear it.
What we have signed this morning is exclusivity and confidentiality and a standstill agreement, which should in time lead to a definitive agreement, which will incorporate things like price and swap ratios and all that. So what we have signed today is really a exclusivity agreement and a standstill agreement. As far as Bharat Financial is concerned, they become a bank literally sort of overnight. And therefore, that gives a huge boost to the cost of liabilities, which means that there's a massive pricing differential in terms of cost of funds. Cost of funds in the bank hand is, runs into hundreds of basis points lower. And therefore, the transaction becomes accretive on the day the loan book is actually transferred.
And also in focus is Jain Irrigation, post a boost from the GST rates. Anisha?
Well, yes, a good news coming for Jain Irrigation over the weekend as the GST Council decided to cut cess on some of the irrigation equipments. So they've reduced the GST rate on sprinklers, nozzles for drip irrigation equipment, and the rate now stands at around 12% versus 18% earlier. Now remember, as per the reports, the government had earlier identified the opportunity for the MIS or the micro irrigation system at around 70 million hectares. This is around 27 million hectares coming in from the drip irrigation system and the rest coming in from sprinklers. Jain Irrigation really caters to both these businesses, and really that the stock is moving higher on basis of this opportunity. So good news coming in, and the stock reacting up around 4% on decent volumes today.
Okay, what are you both? Siamese twins? You look alike. The CNBC bought reams of beige-colored cloth and made jackets for everybody in the office. Okay, well, I choose to be different. Sorry. We have a guest joining us. Thank you very much, Anisha. Somani Ceramics, that company reported under the weather set of first quarter numbers. However, the stock has recovered after their Q1 numbers. To get us a sense of what's the outlook going forward, we have Abhishek Somani, the Managing Director of the company, joining us. Mr. Somani, good morning and thanks a lot for joining us. Well, Q1 was weaker than expected. Could you tell us what was the volume growth, volume fall in Q1 and why?
Was a volume degrowth. The total degrowth between volume and value about 18%. That's the highest we've ever done in many years. But that was a one-off, like you just said. We had a very large SAP implementation, SAP implementation, which went on in April, and then the GST destocking. So effectively, out of 3 months, we really only got sales of 2 months, and that's what took the hit.
Okay. Hi, Mr. Somani. Good afternoon. So if you're saying that it's a one-off, would you still maintain the double-digit volume growth target that you had for FY18?
Right. So if you remember when we spoke last, we didn't have any headwind of GST coming in. We didn't even know whether it'll come in 1st of July or then September. And we were maintaining a double-digit growth, and I still keep maintaining that. In fact, if you annualize H2, it'll be a very decent double-digit growth. Couple of things have played out for us. All the SAP implementation, the GST is out of our way, and we had strategically, started to revamp approximately 4 of our lines, which has started production in the last week. For example, one line went on, one line is going on next week, and then so on and so forth. And the largest one would be in operation in November. So all of this would play out for H2, and we're extremely confident about H2 onwards.
It's good to hear that, sir. A word on margins as well?
So quarter one was a one-off, and quarter two also after GST implementation has been sluggish. We have seen a pickup since the 15th, 16th of August. So things are getting back to normal. I think the fair way to see the margins would be H2 annualized, and if we see quarter on quarter going forward, I think we still have enough headroom. Our plants which are being revamped, which I just talked about for value addition, would start going into play. And also our sanitary ware plant has trebled capacity, so that would go to full capacity H2 annualized. So I think we still maintain that a 0.5, 0.75 basis points on our earlier margins, which we exited with in 2018-19, that would keep growing at 0.5 to 0.75 year on year, if not better.
Okay, so you're saying that you could touch 10% in the second half?
Whenever I talk of margins of 0.5 to 0.75 basis points, that's all on PBT and not on EBITDA.
Okay. Can you give us a sense of the value-added products as a percentage of your total revenues? What is it at, and where is that percentage headed? So
there are three parts to the value-added products. One is the mix between the ceramic tiles and the vitrified tiles. We are at a 55-45 in favor of vitrified. So we want to push that to 60-40 in favor of vitrified again. That's one part. So there's a 5% headroom there. And on the other hand, in our total portfolio, we're about 40-41% value added. We want to push that to approximately 55 to 60%. So that's a lot of work to be done over the next couple of years towards getting that to 55 to 60%. The third part of value addition is not really to do with product mix, but to do with a retail push. So we're currently at about 70% retail sale. We want to push this to approximately 80% retail sale, which will take a few years. So every year we're trying to push the needle, make in more distribution, greater penetration towards B and C class towns and also D class towns. That would increase our retail footprint to, further increase the realization. And the fourth and last but not the least is the sanitary ware push. We have now, in terms of manufacturing, become the 5th largest player in India, and therefore the sanitary ware push gets us better margins, and that would lead to a better overall blended margin for us.
All right, Mr. Somani, we'll leave it at that. Thanks very much for speaking with us. So that's confident sounding management of Somani Ceramics. They're saying that they expect to have double-digit volume growth for the full year and also expects margins to head higher in the second half. A quick break, come back in a bit. Up next, auto companies are in focus after Road Transport Minister Nitin Gadkari makes a pitch for green technology.
Automobile companies are on our radar after Road Transport Minister Nitin Gadkari made a pitch for green technology in vehicles. In fact, he almost gave them an ultimatum. Nishant Arya, the Executive Director of JBM Group, joins us now. Nishant, good morning. You represent the new generation, so I don't think you will be put off by this kind of an ultimatum from the government. But for your company in particular, how do you receive this ultimatum that, no sympathies at all for petrol and diesel and all eyes on electric?
No, that is something which we were realizing since some time, since the government has been so forthcoming for new technologies and the clean energy being a prime focus, whether you see in case of renewable energy or now in electric vehicles. It is something which they have been looking at consistently. And our organization had anticipated the same, and that's why we went in for the electric vehicle division with a joint venture with Solaris. So, and now our vehicle portfolio is ready and we'll be ready to hit the market anytime. And the government policies and initiatives would be in line with our approach as well.
Actually, what percentage of your, components, I mean, you have sheet metal components, tools, dies, molds, are all these very specific to a fuel, or is most of your parts, agnostic to the vehicle? What percentage is agnostic?
Right. So, almost 100% is agnostic. We have no impact with respect to fuel. Since in our case, we are focusing on high-end materials. So every year we are spending a lot of money on R&D and developing new materials, focusing on lightweighting. So in electric vehicles, that is a most important aspect. And we have really developed a very strong engineering capability in our organization, and we would not be impacted with the electric vehicles coming in on the component division, which is really the largest part of the company. And we'll be industry ready for such kind of a thrust coming in.
Nishant, you're also looking to scale up the production and manufacture of the electric buses, right? Has the production started over there? When do you expect the first rollout, and how much could those vehicles cost?
See, electric vehicle is totally depending on the operating pattern of the particular customer which is there. In our case, buses are designed and manufactured differently in case of electric propulsion system from city to city. Like a city like Delhi would be very different from a city like Mumbai or Bangalore, even though all are metro cities, because the kind of passenger intake and the traffic management system which they have is totally different. So, but even nonetheless, I would say that the buses would be ranging between 2.5 crores to 3 crores. But the operating cost of these buses are about 25% or even up to 20% of the fossil fuel propelled vehicles. So it's much lower, and the payback time for any customer is about 5 to 6 years at most. Even though if I don't talk about the intangible benefits of the environment, because every single bus is producing about 1150 tons of CO2 and NOx in about 10 years. And even if I talk about CNG, that's about 960 tons of CO2, which is impacting the environment in a big way. So therefore, we'd be working to reduce that as well.
No, of course. I mean, I know taking away the benefits for the environment, but you're saying that margins will be so much higher in an electric vehicle for a manufacturer like you?
No, so it's not primarily on the margins, because we'd have to work to really align ourselves with the operating pattern, because the battery costs and other costs are higher. So rather we are trying to work on a few different solutions where we are able to reduce the battery content and enhance the charging, with which we can use it multiple times over a period of 10 years, which is generally considered the life of any bus.
What orders do you have right away?
No, so currently actually everybody is waiting for the new policy which is coming up from NIfty and heavy industries on electric vehicles. Otherwise, we have been in discussions with multiple STUs and private customers across the country.
Okay. I mean, if you can draw up for us, how do you visualize, or when do you visualize it coming? It seems like a chicken and egg as well, isn't it? There should be charging stations, and there should be manufactured capacity, and it should be for the customer, at least as competitive as a petrol diesel vehicle. Otherwise, why would I shell out that extra bit? So is there a tax? Sure. How are you therefore seeing the timeline and the rollout?
No, personally, I feel the next financial year would see a huge uptake on the electric vehicles, whether we talk about electric buses, electric cars, or any of these areas. But the most important part is that today the awareness for such kind of vehicles is definitely there, but most of the customers do not have a holistic purview on this technology. So it's important for manufacturers to have a comprehensive solution for such customers, where they are able to have a know-how of the vehicle, the battery technology, the charging systems, and also train the manpower of most of the customers in terms of buses, and also educate the passengers as well. So we are looking at the holistic solution in this case, and we have built capability and competency on the same lines. So as an organization, we are betting in a big way on electric, and in times to come, you will definitely see that we'll be rolling out many other initiatives on electric as well.
Okay, well, one last question. You all will have to buy more aluminium rather than steel, since you are talking about lighter all the time.
Not really. Definitely aluminum would come in eventually, but not immediately, because in steel also we have multiple ways and means to reduce weight with high strength steels, and also changing the process.
All right, I guess there will be occasion to speak to you again and again on this very interesting trend that will be obvious in the vehicle space. Thank you very much for joining us with those.
Watching Halftime Report, it's a near 5% up move now on IndusInd Bank post news that came in that they're an exclusive talks with the management of Bharat Financial. So that stock doing well. Another one in focus on the downside is Idea Cellular. So that stock has lost about 1.5%, and the bulk of it has actually come in the last few minutes odd. Let's get chatting with our technical experts. Ashwini Gujral and Prakash Gaba now join in. Ashwini, first to you. We've seen a bit of an up move now come through for the market. Would you call it a breakout? And how does this alter your strategy for the day?
See, first of all, Nifty as well as Bank Nifty both seem to have broken out. But the interesting story is something else that, okay, now if IndusInd goes and buys, Bharat Financial, what does Yes Bank do? Buy Mahindra & Mahindra Financial. So for the next few days, the market is going to be warm because now people will expect, almost all of these well-run private sector banks to go out and buy some rural NBFC. So rural NBFCs will keep moving up, and maybe HDFC Bank, Axis Bank, Yes Bank, they are going to remain warm as well. Since Yes Bank is the closest to IndusInd Bank in terms of size, etc. So I think the next big run could be in Yes Bank. And once the banks do well, I think Bank Nifty also should probably head towards 25,000 in fairly short order. As far as individual stocks are concerned, IndusInd Bank is still a buy with a stop of 1750, target of 1800. Muthoot Finance is a buy with a stop of 500, target of 535. And Mahindra & Mahindra Financial is a buy with a stop of 447, target of 470.
Okay. Yeah, actually, both these entities, private sector banks as well as NBFCs, were anyway in the driver's seat, and this has only put perhaps added one more gear up to their acceleration. Well, Prakash, good morning to you again. What are you trading?
I think Nifty certainly is looking good, so it's up, and I would say that trade stocks specific, Bharat Financial certainly is looking good. The way it's trading looks like it's heading towards 1000 zone. I think it's heading there. Stop below 950 should be fine. Divi's Lab is another stock which is more of a sideways move. Looks like it showed its head up today, and possible target on the upside on Divi's could be in the vicinity of 740, stop below 708. I have one more stock that I've just picked up now is Godfrey Phillips. That looks good, and that can see a climb to levels close to 1125, stop below 1037.
Okay. Well, Ashwini, there are a bunch of other stocks also I wanted to ask you about. For starters, Suzlon, that's seen kind of a W-shaped, graph in the past few weeks. Is this some kind of a trading pop?
Well, still below its 200-day moving average. It can have a trading rally, but it's not in any sort of great bull market. Whenever, you kind of talk of moving away from fossil fuels, etc., Suzlon also puts its hat into the ring. Okay. But I think gas stocks are looking much better.
Okay, gas stocks, would you be equally weighted on GAIL and Petronet?
See, Petronet is doing better. So maybe if I have to choose between the two, Petronet is the better stock.
All right, yes, up about 5% as we speak, Petronet. But to be fair, GAIL as well in the ring, in the lead with a 3.7%. And that's the European market opening, and that perhaps also explains why the Indian markets did very well. This is what they smelled from the curb trades in Europe, and that's proved to be a very great tailwind. To be fair, it's not always that when Europe starts all guns blazing that we have been able to climb, but today it's all worked in favor. And of course, we have a couple of sectors, we've got several sectors which are firing. One, of course, is, as Ashwini was pointing out, private banks and NBFCs with the smell of more deals keeping these stocks intoxicated or on steroids. We have the auto stocks relieved from a lack of too big a cess burden. And most of all, we have gas stocks. And here's our expert, Varinder Bansal, our corporate editor, to tell you why these gas stocks are firing. I mean, we know the news. The surge is because of a renegotiation of the LNG pricing formula from Australia's Gorgon project. Varinder, you tell us what exactly is the benefit to the two stocks that have been going through the roof, GAIL and Petronet?
gas is a raw material for petronet LNG, and the pricing after that renegotiation, and hence, you are seeing the stock moving up, and the off-takers for gas are companies like GAIL, BPCL, IOC. GAIL is important because it's not only the, the cost moving down, but also the demand push which Kotak is expecting, and that is why the stock is moving up. So I'll tell you what has happened. Importantly, there's a renegotiation of LNG pricing formula from Australia's Gorgon project. If you remember, in 2015, there was Qatar's RAS gas where the renegotiation happened, and that was at nearly half the price of the earlier contracted price. Now, what has happened this time with this Gorgon project? The new pricing formula is nearly 13.9% of the prevailing oil price at the port of delivery. In a simple term, it means that if crude is at $50 per barrel, the pricing comes 6.95 per unit. Earlier, this same pricing on the stipulated formula was nearly 8.25 per unit. So in a simple manner, the pricing comes down from 8.25 to 6.95, and hence, companies like Petronet LNG are benefiting. Petronet, of course, has the highest, volume in terms of the import coming in from there. The last time I remember, it was nearly 1.5 million ton per annum, which was signed in August 2009, and hence the company benefits. Some of the numbers which are floating around say that this could be a saving of nearly 10,000 crore for India because of this renegotiation. Kotak in one of the notes says that it is very good for GAIL because not only the price cut but also the demand push will help GAIL. Also for Petronet LNG, it's a feather in the cap. The stock trading around reasonable valuation with high growth expectation from the gas sector as a whole is moving up. So watch out for both these companies. Even the oil minister tweeted the same on this renegotiation during the weekend, which is what is adding fuel to all this, stock moving up.
All right, Varinder, thanks very much for pointing that out. A quick break. When we come back, it'll be time for the Commodity Corner. Aurobindo Prasad Gayan of Kotak Commodities will join in on the other side. Stay tuned. Half-time report, equity market holding ups. Let's shift focus to commodity. Then Manisha Gupta is here with a roundup. Manisha, over to you.
Can you compete with us, Manisha, today?
Not at all. I'm not even getting in that space, so I'm taking another route, weather this time around. Okay. And we haven't spoken about that in some time. And remember, there have been no rains for last 1 week. And the latest IMD data shows that from June 1st to September 10th, that's until yesterday, the monsoon is now 6% below normal. So we are nowhere near where we started and what the numbers IMD had come out in sense of the monsoon this time around. But there's some good news here. IMD also says that the rainfall is expected to be below normal until 13th of September, and from 14th to 20th September it is expected to be near normal. Another perhaps positive also is that because we are seeing so many gaps and cracks in rainfall, there has been a state of lot of rain and then no rain at all. So they also say that while the withdrawal of monsoon usually starts 12 days from today, but this time around we perhaps would see them extended and the rainfall may not actually withdraw until the month of October. So those days, of course, is something that the...
Net, what is the impact on, say, food grains or, important kharif crops?
So there have been instances of a lot of pests and stuff like that, because this is the time when the monsoon... So the important months really are July and August, and we didn't see too much of rains in August, and that actually happened in the last of August or September. So there are instances where you have seen much of crop underwater, deficient, lower yields, etc. So there are a bit of a concerns. So even as the sowing numbers are just about 0.5% less than previous year, it's the yield, the productivity that the markets are slightly concerned about at this point in time. But let's get in Aurobindo Gayan as well. And
no, I think we're not able to get through to him. So we'll touch base with you in a bit. Do we have Aurobindo with us? All right. Okay, then we'll touch base with you, Manisha, in a bit on which are the crops that you should be bullish on. For the moment, we have to take a break and we will get you more stock-specific action, more on the stock that's buzzing today. Bharat Financial. Well, actually, as we've been pointing out, private banks and NBFCs are up and about today, especially after IndusInd announced to the exchanges that they have reached an exclusivity period with Bharat Financial, and that would be a standstill in terms of other negotiations that either parties can have. So they're going to hammer out a deal within maybe 30 days at the outside. That's what Mr. Sopti told us, and now we want to get the other side of the story. We are going to be joined by Mr. M.R. Rao, the Managing Director and CEO of Bharat Financial. He told me at the outset that he won't talk stocks or swap ratios. So, Mr. Rao, taking that on board, what does this announcement mean? Does it mean that you will have the deal with IndusInd? That's for sure.
No, this is kind of an engagement, so the due diligence has to be done on both sides, and we have to...
the deal with IndusInd, that's for sure.
No, this is kind of an engagement, so the due diligence has to be done on both sides, and we have to negotiate the final terms, post which we can say that the deal is a done deal.
Okay. Hi, Mr. Rao. Good afternoon. So even now, is it like it's 99% there?
Yeah, I mean, that's why I use the term engagement. You know, we're engaged now. So we'll get married hopefully after the due diligence reports, terms are agreed.
All right. Well, we'll take that as done deal then. In India, engagements are not normally broken. Bharat Financial always wanted a bank license. Now you are going to be a bank, Mr. Rao. What advantages does it give you?
A couple of months back when we spoke, I said that one, the cost of funds will be lower. That's given. Second is it adds to our ability to get more efficient. For example, we can, by being a part of a bank or being a bank, we can get cashless in the field. Today, you know, bulk of our transactions are cash, at least in terms of collections. 100% of our disbursals are through the electronic, digital route. But if we are able to eliminate the collection piece as well, it will add to a lot of operational efficiency. The third is we'll be able to add more products. Today we are a microcredit company. You know, we're just giving credit at best and doing some cross-sell. But once we are a part of the bank, you can get customers to open savings account, get them to park their small savings and deposits into the bank account. Essentially, this will become financial inclusion in its truest sense. We have just been on the asset side, now we'll be on the liability side as well. I think that gives us a scope to handle the competition from the small finance banks and other banks on an even footing once this merger is done.
Okay. So would it reduce political risk as well, sir?
See, once you have the customer savings and you'll have a much stronger relation, right? Just instead of a one-sided lending relation, once you have their savings and deposits parked with you also, the stickiness of the relationship goes well. So to that extent, a lot of these risks associated, whether it is the political risk or even the other risks, are mitigated by being a part of a bank.
Okay, what will be the nature of the merger? Will you be a subsidiary or will you merge into the bank?
I think those are all the details that we will thrash out in the coming days, and then finally figure out the structure of the transaction.
Are your risk weights different from a bank?
Yes, that is one angle. The operational efficiencies, the customer stickiness. I think there are a lot of benefits in converting ourselves into a bank. The advantage in this type of a transaction is that we get a ready-made platform of an established bank, and we can hit the ground running.
Okay, but well, your cost to income, when I last saw your presentation, is 52%. IndusInd's is 46%. So what happens? Does the average move in between, or does yours come down?
No, in fact, currently our cost to income of the 50 plus is partly on account of this demonetization and the election impact by which we couldn't grow the book. But we feel that once we become cashless and once we become we use more and more technology in the field, our cost to income ratio would be south of 40% also. So I think we'll get a lot of synergies by being a part of a bank, and that will play out in terms of operating efficiencies at the ground level, which will in turn reduce the cost, benefit us through cost efficiency.
Okay, would all of your 1,400 branches become bank branches?
No, I think all those, as I said, will get thrashed out in the next few weeks as we dive deep into the details of the structure. But at the customer touch point level, it doesn't change. We will continue with our customer engagement 52 times a year. But by being cashless, we get into a lot more efficient operations and far more robust operations than we are currently in a position.
So you're saying all your touch points will not become branches?
No, I mean, I can't comment on that because the details have to be ironed out in the next few weeks.
Okay. Sir, just wanted to know on asset quality, your NPAs were at 6%. Would you say that that's the peak? Do you see them already falling?
Oh, absolutely. Absolutely. So we stand by what we said. Our growth is on track. The run rate of disbursements is good. The one-time impact of demonetization is being fully provided for. All the new loans that we have been giving from January 1st are clocking at 99.9% repayment. So it's business as usual for us as far as the new loans are concerned. And we also stand by our guidance that we have given for the year, both in terms of growth at 50% and profit target.
Okay. Well, you have 68 lakh customers, you told us in your last presentation. 51.5 lakh are active. Will all these open accounts? What I'm asking is how many of your customers are rich enough to open bank accounts and really give IndusInd meaningful business?
See, there are two ways of looking at this. One, almost all our customers have some account with a bank one way or the other. How much savings do they have is the question that begs an answer. Our interactions with the customers say that you will end up having 3,000 or 4,000 rupees balance in those accounts. Now, there are two steps to this. First, get the customers to open accounts and start making our disbursements into the IndusInd accounts as and when this is possible. The second is slowly get them to start parking their savings in IndusInd Bank rather than the other banks so that the balances increase over a period of time. This is where the Kirana store project that we have been talking about comes in handy. Essentially, our plan is to create 2 lakh touch points, Kirana stores in the 1 lakh villages that we are present in. So hop, skip and jump, a customer can walk into a Kirana store and deposit, have 50 rupees or 100 rupees and thereby increase the savings. I think this is what the larger game plan.
Okay, Mr. Rao, I'll leave it at that. And I kept my word, didn't ask you any share-related questions, but I guess that's the one that everyone is waiting for. Thank you very much for joining us. Will this be 0.5, will it be 0.6 or 0.7% of an IndusInd share? What should be the value of the Bharat Financial share? That's the word that we all want to know. In fact, on that note, we prodded Mr. Sopti with some of those questions. Here are his answers.
What we have signed this morning is exclusivity and confidentiality and a standstill agreement, which should in time lead to a definitive agreement, which will incorporate things like price and swap ratios and all that. So what we have signed today is really a exclusivity agreement and a standstill agreement. As far as Bharat Financial is concerned, they become a bank literally sort of overnight. And therefore, that gives a huge boost to the cost of liabilities, which means that there's a massive pricing differential in terms of cost of funds. Cost of funds in the bank hand is, runs into hundreds of basis points lower. And therefore, the transaction becomes accretive on the day the loan book is actually transferred.
All right, so that's the word on that deal. We'll wait for when the final deal is announced. For the moment, markets looking good. And as we wrap up then on Halftime Report, we leave you with some market opinion. We caught up with Pramod Gubbi of Ambit Capital earlier this morning, and he says that for the market, the fundamentals continue to disappoint.
We've always seen this dichotomy over the last 8 to 10 months where we've had significantly strong inflows, whereas fundamentals have continued to disappoint, both in terms of macroeconomic indicators as well as earnings growth. So it's a market which has been entirely driven on fund flows, and increasingly market participants are concerned about valuations and the continued support from fundamentals or the lack thereof. So unless and until we either see a significant recovery in the underlying economy, which is increasingly becoming tough to envisage that at least over the next 6 to 12 months, or we see a sharper correction where some value emerges in pockets of the market and people get excited again. Valuations will be the biggest hurdle, and also more importantly, the continuation of underlying demand, given where the economy is headed. I think the recent numbers clearly suggested that we are on a weak wicket on multiple fronts, both in terms of investment and exports. So very difficult to see any economy continuing to be supported entirely by consumption. So a combination of valuations and perhaps likely weakness in consumption coming through. Perhaps worth stepping out, taking some profits in both staples and discretionary, and waiting for a correction there. We've been positive on a specific theme, the whole financializations of the savings piece, ever since this government came into play, and we've got a sense of what they're up to. This whole attack on black money, demonetization, everything pretty much goes in that direction, which has meant that a lot of the savings in the Indian economy has moved from physical savings, hitherto real estate and gold used to garner a large percentage of it, and that's begun to move into financial markets, either through mutual funds or insurance products and so on, which has clearly benefited a lot of these non-bank financial companies.